Right, how are you doing? Oh, right. How are financials innovating in the age of realignment? First question, if I may, how many of you here are actually from financial institutions or advise financial institutions? It's all right, you're amongst friends, you can confess. Okay, we've got a fair few. All right. It's not only for financial institutions that we're going to look at this, but it's vitally important that with any of this new technology that we're exploring, especially the blockchain, that institutions who are going to be most affected by it are able to innovate within the environment. And because you guys gave to cricket, you gave us Chanduka. All right, you guys did the best for everybody, for the world of cricket with Chanduka. So, as Australians, as we are, you've met quite a few of them. Just a second. Is that working? That's it. So, as Australians, you've met a few. We've got to give something back, okay? Because obviously Chanduka was a major name, and we respect that totally. So, a couple of things just about Australia, and you'll see the relevance of this as we go through. I mean, in Australia, we actually have, of the most poisonous snakes, 25 most venomous snakes in the world, we have the top 21. Okay, that's not a very nice thing to say, but it's a fact of life. We equally have sharks that swim inland. Okay, they go in the rivers. And we have these fellows, the crocodiles that swim out to sea. Okay, so Australia's, whilst we're all very friendly and very welcome, you might think it's not the right place to be. But of course, these sort of fellows by themselves are related historically to these guys. Now, this is courtesy of Steven Spielberg, so I feel grateful for that. But the key thing is, these guys ruled the Earth for 170 million years. Now, I'm sure you've all had a highly classical education. So how did the dinosaurs die? What happened?
Meteor.
Right, meteor. Right, okay. So there was a meteor that actually happened. It was around 65 million years ago. But these guys, they're strong and resilient, and established as organisations as a dinosaur until, my fingers are not as good as door keepers from Australia, so I apologise. Until 65 million years ago, the actual meteor struck. Now, a lot of people don't know this, but the actual dinosaurs, it took 33,000 years for the dinosaurs to die out. Okay? And that's an important issue to understand, as we'll see as we go through. And you will see the relevance of this, I promise you, eventually. Alright? So these guys faded out after 33,000 years. Now, when we consider that the sharks and the crocs actually were around before the dinosaurs, these guys survived. And in fact, they still do survive. And most of these ferocious creatures in Australia are based in the Northern Territory of Australia. Now there is relevance to this because the capital of the Northern Territory is a place called Darwin. Now, Darwin himself never visited the northern part of Australia, but he was on the boats. Okay? And of course, he's attributed with the idea of, survival of the fittest. Now, it's actually not true. He never actually said that. What he actually said was, it's not the strongest of the species that survives, nor the most intelligent. It is the ones that adapt to change. Now, the dinosaurs took 33,000 years. It wasn't instantaneous, so they didn't adapt to change. So the biggest issue is, the dinosaurs were strong, established, and resilient, and so are you guys. Until we have the perfect storm coming. Okay? Now, obviously the blockchain is the main core of what we're looking at here, and that's my passion. All right? I mean, I have written a book on the subject, been in the space for about 3.5 years, but there's a whole collection of technologies that are coming to actually affect the whole of the financial sector immediately, and a whole variety of other spaces, as you've seen already in the past 2 days, or past day and a half. So the key thing is this quote from the Harvard Business Review. The blockchain will do for financial services what the internet did to media. Now, you may think, yeah, we've heard it all before, but if you think about the very first iteration of the blockchain, and that was Bitcoin, as was stated in the previous panel. And this is the abstract from the Satoshi White Paper. What I would suggest to all of you, it's 9 pages long. There's 1 page of maths, the rest is plain English. But the quote I want you to see in particular is this area just here, where Bitcoin was created to create electronic cash that will allow online payments to be sent from one party to another without going through a financial institution. Now, if that's not a meteor, I don't know what it is. Okay? And you might think, yeah, okay, heard it all before, it's all good in theory. But the reality, I mean, I'm from the UK originally. I've been in Australia for about 16 years, from a place called Brighton. Anybody been there? Anybody confessing? Oh, good, we've got a couple of people. It's the Calcutta of England, I think is probably the best way to describe it. It's not actually too bad in all fairness, but the crazy thing is, I live in Australia, and this will be the same for India, all right? I've actually got money in a bank in the UK, in Brighton. As it stands right now, it is quicker for me to actually fly from Sydney down to Heathrow, to drive down to the south coast of Brighton, and Brighton's got a lovely pier, go on there, get a kiss me quick hat, and get England's greatest contribution to haute cuisine, fish and chips. And then to drive back up to Heathrow, and then fly back all the way back to Sydney, than it is to get my money from the banking system. Right? Now, if you think of anybody right now, especially the millennials, where yesterday is too late, that's just insane. Now, it's not how do you go at the situation, that's just the reality. And it's a legacy of the problems that exist in the banking sector. Because it takes 3 days to get monies by the banking system, $50 in fees, and on average about 2.5% to 4% below market rates. That's all profit, essentially. Okay? Now, the reason why it takes so long is because of the legacy of the banking system. Now, this is traditionally, if you're getting money from the UK to Australia or even to India, you'd have to go via trusted parties in the traditional banking system. Because clearly, if you're making any form of international payment, you want to make sure that you're going to get that money. So it goes via trusted parties. And that's the infrastructure of trust. What the blockchain does is remove that. Now you might think, yeah, okay, this is all well and good, so what's actually happening? In the cryptocurrency space, and I'll come on to the banking space in just 1 second, with Bitcoin, you can actually get funds cleared internationally within an hour. Now, I mean, those of you who came to the workshop, I actually gave 5 people in the workshop a little bit of Bitcoin, and they cleared actually in about 8 minutes, which was quite fast. In Mumbai, where I gave the workshop yesterday, it was about 24 minutes on average. But there's a currency called Dash that's doing it now instantaneously. Right? Now, where the banks are actually beginning to adopt this, I did a talk in Dubai back in May last year. And before going on stage, went down for a cup of coffee, and I opened up the paper, and here was this advertisement. Now, there's a great narrative that normally happens where there's a lot of Indians, Pakistanis, Bangladeshis, Filipinos, Indonesians have a natural narrative of sending money home to the family and extended family. In Dubai, this organisation, the Emirates NBD, which is a bank in Dubai, it's the first time I've ever seen an actual advertisement for this, where they were saying, instead of waiting in queue to pay 22 Arab Emirate dollars, which is probably about probably around about, just trying to think, would be about $10. So what's that it's around $10 US. I was trying to think of rupees. But they can actually send money back home instantly and for free. So this is just the tip of that meteor. Okay? And so it's a question of, there's a complete new paradigm that's actually coming through. And when we look at the connected world, where lots of technologies are coming together, this is actually so disruptive And financial institutions have never faced this style of meteor before. And so, when we look at this a bit further, I want to sort of give you the top 10 things that I'm seeing from around the world in which the financial institutions are actually embracing innovation. Because if financial institutions do not embrace innovation, they will be like the dinosaurs. This quote, from the CEO of the Commonwealth Bank of Australia. This is life or death. Sometimes you don't need to be a market leader but a fast follower. And this was actually the launch, it was quoted that in the Australian Financial Review when they launched the first innovation lab in Sydney. They've subsequently got innovation labs in London and Hong Kong, and they have several pop-up incubators that they have created. And they dubbed them an idea incubator. And the first thing that we're seeing from those that are embracing this successfully are, number one, innovation has to start from the top with shareholder buy-in. Okay? It's vitally important. It has to be top down. Everybody's got to embrace this innovation. The second thing is, there's a lot of complexity in all of these technologies. For example, I'm involved and immersed in the cryptocurrency and blockchain space 24/7, as is Darryl, as are other people here in the room. And those of us who are involved all the time, it's impossible to stay on top of everything. So you've got, and that's just the blockchain, you think of the other techs as well, it's about education for all those parties in an organization to get that feel of innovation, to see where the threats are and where the opportunities are. The thing is that within financial institutions especially, the third thing is to understand that it won't be easy, and it's about communicating effectively. Because I spent most of my professional life within banking institutions, working with Lloyds Bank, HSBC, GE Commercial Finance and their acquisition finance area. So I've been inside the banking sector. But I'm in the startup sort of community right now. That's where I wear these pink shoes. The key thing is that in financial institutions, there's a massive difference between innovation and the operational side. Because innovation is almost an anathema. It's something that's just not in the mindset. Because you've got issues of compliance, which I understand fully. You know, it's vitally important. You've got fraud, there's audit, and there's risk. There's all these complications that make it hard to get ideas through to operations. And people in operations often feel that they feel threatened that they might actually get taken out of the equation. And so there's this quagmire of treacle that exists between innovation and operations. And I'll give you one little anecdote. In July 2016, I chaired a conference down in Melbourne, a blockchain conference. And we linked in direct to the innovation labs of Rabobank in the Netherlands. And they were very generous with their time. They got up at 6 in the morning to do this live interview. And these guys had developed a full prototype proof of concept for reducing the number of processes that were around loan syndication, where, for example, there's a $250 million loan is actually syndicated out to maybe 10 banks. And they reduced the number of processes from 48 to 12, leveraging blockchain technology. And this was in July 2016. And I asked the question, because I've been in the financial institutions, how long would it be before that was going live? The body language said everything. Arms folded and looking up at the sky. 3 years. And that was for a product that had been tested, the prototype, 3 years to get into operation. And these are challenges. So one of the key things is, those banks that are actually institutions that are thinking like a startup and not a bank are the ones that are succeeding in this space and will survive because they're prepared to think about adapting to change. And so it's not easy thinking like a startup. It's not a natural thing. Because in startups, I mean, how many startups do we have here? Okay, a few, right, okay. So you'll identify this as energy, you need energy because you're doing 70, 80 hours a week trying to get your business up and running. There's passion that exists because they can see there's a difference that they can make. There's a drive to be successful. And they understand the technology. And what's happening in the fintech space is lots of the really profitable areas of all the banks are being eaten away by a lot of fintech startups. This is the meteor. And also, when it comes to the technology, they also understand what a client needs that technology to do, which is absolutely vital. And there's this last one, which I can understand the banks and financial institutions would feel a little bit uneasy with, but the attitude of ask for forgiveness, not permission, is very much in that startup community. For those who've got startups, if you identify with that expression, put your hand up. Right, okay. Almost all the startups that are here, put their hands up. Okay? That's the attitude that you need to actually succeed in this. And the thing that I would say is if you're starting out in this, find the intrapreneur within the business, the internal disruptor. Now, in preparation for this talk, I went online and did try to find a board of directors from an Indian bank, but it would have taken me, I think, a long time wading through Google. So I just picked out the first one I could find on Google. And I think it's fairly typical of a lot of financial institutions. And I'm not having a go at the banking system, this is just the way it is. So Wilson Bank in the States, okay, that's the board of directors. How many of those would understand about AI and about blockchain and big data and those type of things? How many of those actually even learned to actually use a computer? What was the first time they learned to use a computer? Probably when they were in their mid-20s, maybe 30s. So you've got to find the intrapreneur, the person that's prepared to disrupt. And I'll give you an example. In Australia, there's a good buddy of mine who's a disruptor for IAG, which is one of the biggest insurance companies in Australia. About 40,000 employees. He is commissioned just solely looking at where the new technology is going to disrupt them. And the key thing he always talks to me about is driverless cars for the insurance industry, for example. Now, I appreciate that's not blockchain, but I just want you to get the sentiment. From their point of view, driverless cars will reduce the average premium, they believe, from about $600 down to about $100, possibly in as little as 5 years. Now, 60% of their revenues, on average, in the insurance industry, comes from car insurance. This is the meteor. Disruption. It's the meteor. This is probably the most important. How many of you that work in financial institutions have been to a meetup group relating to fintech or blockchain or anything like that? Okay. How many of you have done a hackathon? Or anybody in general says, okay, we've got a couple of people doing a hackathon. Just for those of you who don't know what a hackathon is, it's a weekend event where on a Friday night you get people from all over the ecosystem that come together. People then pitch a single idea, and then people actually join the ideas that they feel that they resonate with. And at the end of the weekend, judges make a decision on which project is the best, with all the teams working on it over the weekend, flat out. And they get ideas out of that. I attended a National Australia Bank hackathon way back in December 2015. We pitched the blockchain business, which was way too early for NAB at that particular time. But at that space, they created a number of new products that they would never have seen before. And that's by engaging with startups. And so, absolutely, if there are hackathons, join them. If you can't find one, create one. Because it's not about what your country can do for you, as John Kennedy said. It's, what can you do for the ecosystem? It's not about you, it's about the ecosystem. If you want to understand what's going on, embrace it. And so, you've got the hackathons. This was one that was an Indian one. There are startup incubators everywhere, accelerators everywhere. There are co-working spaces. And I know that they exist in Bangalore and Mumbai, because I've spoken to a few people that are in them. But you've got to get out there, you've got to get amongst them. and find those people. And I mean, the meetup groups. Meetup is, worldwide, it's becoming massive for getting tribes together. If you can't find a fintech meetup or a blockchain meetup, create one. Find these people that have got the energy, the passion, the drive that will save you from that meteor. Reinvention. Simon Camp from Reinvention, I think, spoke yesterday, and I think he's speaking again today. I mean, these guys have got a dedicated venture fund, and they're part of a bank. Other banks have set up funds at the same time. And it's important, to actually embrace the community and invest in that community when you find good ideas that you think can work. Equally, Reinventure have co-invested with their competing banks. Now, in the dot-com era, I mean, I'm old enough and old enough to have been through that dot-com era, and there was this word called co-opetition, which people used to talk about and never used to do. It's about working with your competitors, because the industry has the same problem. And if you can embrace that together, that's really, really powerful. And we're seeing this happen. Reinventure works with NAB, their direct competitors, to co-invest. There's the expression in the Aussie fintech space of eating your own dog food. And a model that is actually happening is where banks, via their venture capital arms, are investing in early stage startups. And they invest across the portfolio. And the idea is they help to nurture and season and grow those startups in tandem with themselves to work out how they can embrace the tech, how they can solve real business problems. And then you just wait to see which of those becomes really successful, and then you buy them. And what that means is you preserve your brand value. Because if you start looking at a blockchain-based product, for example, and it screws up, your brand value is going to be under severe threat, because trust is in the DNA of every financial institution, and you cannot afford to compromise that trust. If you are working with a fintech startup or a blockchain startup, you can at least embrace it without it being, all your branding being on the table. And consortia. There are a number of consortia that exist. Ripple and R3, those are blockchain consortiums of banks working together. Key thing, get out of your comfort zone. All right? I've worked in banks that have these type of structures. How many of you in the banking institutions work in something similar to that in cubicles? Okay. Is that a good place for creative thought? Just ask the guys at Capital One. This is their innovation labs. Just ask that Standard Bank, who have playrooms for ideas. These are the successful people that are embracing technology. So it's absolutely going to become to understand startups' motivation. This is the root cause. We've got just 4 more of these to go, so pay attention. The startups, they're working all hours that God sends. They're really passionate, they're driving, they've got goals, they need support, they need mentoring. Get some of you guys out there mentoring some of these guys. Understand what's going on. And I guess this is probably a very important thing to understand. Startups and banks are aligned. In as much as startups have weak balance sheets, they've got little cash, they're doing this on the smell of an oily rag, which makes them really focus on getting ideas out there that customers want. When banks have too much money, they become lazy. It's very easy to put money into new ideas and not really think about it. I'll come to the questions at the end if I may. We're running very short on time. That's my only... I'll answer the questions at the end if I may. So the key thing is, startups are high risk, we know that. Banks, low risk. The key thing is, what startups want is distribution, and what banks want is access to innovation. There's a mutual alignment of needs. Successful ones are getting out there, but do understand 90% of the startups fail. So it's not going to be easy. You've got to actually have a good filtration system. This is probably the most important book for any of you to read if you're serious about innovation. How many of you have read The Lean Startup? Okay, a few. How many are actually implementing Lean Startup methodology in their businesses? Right. It's vital. This was actually created by a guy called Eric Ries after the dot-com failure. And if you remember those in the dot-com era, where you actually had people that was, they burned through, pets.com burned through 12 million bucks in 3 months, I think it was. Lots of companies just had excessive spending. The Lean Startup was about, okay, how do we actually get ideas out there that don't cost a lot of money? And it all focuses around a circle. And it's about ideas and building ideas around sort of core ideas and testing those ideas. Testing it in front of markets, and then getting that data, and then learning from that data, and then changing. The other thing which is really hard for financial institutions to do is to accept failure. Those that are successful recognise that failure is part of the innovation game. But the most important thing is to fail fast. If the ideas don't work, cut them quickly. And the Lean Startup methodology does this. It looks at the idea of a minimum viable product. How many of you have heard of an MVP? Okay, that's good, more than I thought. That's great. All right, it's vital. It's a way of failing fast, but at reduced costs. If you actually build it slowly, get feedback from the customers, readjust, realign. And just for the blockchain space, just to give you an idea of what's been happening in terms of embracing, it's been a year of the 4 Ps. It's the proof of concept, the prototype, very limited pilots in the blockchain. In other spaces, they're much, much quicker, and the puffing up of chests. One of the commentators in the last session commented about the hype or one of the questions came out about the hype in the blockchain space. There has been a lot of hype, but the underlying tech is very, very powerful, and it is that meteor. And the final thing is, don't put your head in the sand. This isn't going to go away. Now, this is a bird that is part of the ratite family, which are sort of, the likes of ostriches and emus and that type of thing. And the reason why Australia, again, is part of helping you understand the process of innovating is that we actually have, in our national coat of arms, the same emu and ostrich, which is part of the ratite family, where the head is not in the sand. So you gave us Chanduka, we've just given you a broad brush section of how the most successful financial institutions are dealing with all this realignment that's going on. Don't be part of the dinosaurs that got blown away by the meteor. Be the sharks and the crocs, the ones that survive and adapt. Thank you.